over the last 5 years, the Southern Company stock has been doing pretty well. We can see it's up 40%, which obviously the S&P 500 has gone up more than that over the last 5 years. However, this stock is not primarily going to be driven by the share price. It's going to be driven somewhat by the share price, but also mainly by the dividend yield, right? Southern Company is a utility-centric company. Generally, those go off of dividends. That's just how they derive the profit to the shareholders. You can see over the last 5 years, even if you bought before the drop during COVID, you'd still be doing pretty well. And what I like, I really, really, really like the all-time chart. But if you pick any of these peaks here and go off of it, you're gonna, except for this one at the very tippity top of 2020. No, even then, I was off a little bit. If you go at the very tippity top at 70, you would still basically be matching inflation. But generally, the Southern Company, if you pick any of these spots, even any of the peaks, you're going to be outperforming inflation by quite a bit. I think inflation since 2000 is about 87%. If we go from 2000, even let's just do 2001, because it had a dip in 2000, up 273%, right? So you are going to dramatically, over a long time frame, the Southern Company has been outperforming inflation dramatically while deriving a over 3% dividend, at least recently. And that is very good, right? That's awesome. So I like this in a dividend stock, or a dividend portfolio, roughly paying around 3 to 4% while also matching, ideally beating inflation. But you would hope that in the worst case scenario, your portfolio is matching inflation, so you don't have to worry about putting money in. You can just worry about driving money from it. And the Southern Company does very, very well in that. But I also like it in another sense, right? Because they do electrical utilities and that sort of thing, right? I like the utility space. And people are starting to catch on. They're like, this AI stuff requires a lot of power, so much so that we're seeing money being thrown into nuclear. And people do not like nuclear energy. Generally, it's scary. It's fairly clean nowadays, but there's still, people don't like the idea of nuclear. They think nuclear bombs just generally. I don't necessarily get it. However, the energy industry, it is clear they're going to need more and more and more power. Well, even if you think AI is overblown, even just data centers, right? That sort of thing. They require so much energy. And we see that from all the big players, the Microsofts, the Apples, the Googles, the Amazons. All of them have these sort of centers for the most part. I think Apple a little less so, but all of them have these centers and they require vast amounts of energy. I work at a Bitcoin mine, so it's a pseudo data center. It's not quite the same, but we use so much energy. Like, certainly we are not that big, and we use crazy amounts of energy. So utility companies, they're never going to grow at insane rates. However, over the next 5 to 10 to 20 years even, they may outperform, certainly more than they have been over the last couple of years. We are at a bit of a peak just because of rates dropping. These industries generally rely on large amounts of debt, and we can see that here if it loads correctly. Yeah, we can see they do require large amounts of debt. That's just how the industry is. So yeah, it's hitting highs in terms of share price. That's just how it is. As a long-term investment, you really shouldn't worry about, even 5 to 10% jump. I mean, if it's too much for you, that's fine. But if you're planning on holding this for 5 to 10 years, or you want a dividend portfolio, it really shouldn't matter that much. That's just how this sort of thing goes. But yeah, it is marginally expensive. Is this the most expensive it'll ever be? Probably not, but you don't know that. I don't know that. So I like this company. I really do. I think it's going to do a good job at doing what you want it to, which is deriving a solid profit, beating inflation. And, if things go great for utilities, it may even do a little bit or significantly better than that. Let's take a little bit look at the history of the dividend. Yeah, clearly it's been growing, not crazy percent. It looks like they raise it 3% every year, which is fine because it's already at about 3%. So you're gonna expect to, I would say, beat inflation with this stock. Ideally, that's what you're hoping for. But worst case scenario, you're gonna get a 3% yield that increases 3% every year, and you're gonna do just fine. And we can see PE really doesn't matter as much for dividend-centric stocks. It matters, but it's just kind of what matters me more for dividend stocks is the yield plus the share price performance, right, over time. So that's what I look at. But if you want to look at PE, it's maybe a little high. I don't know. It really just depends. It's all over. PE is all over the place. PE is more important for growth-centric stocks, in my opinion. But let's take a look at what some analysts have to say. Schwab gives it a 42. They actually think it's going to be above average performing stock in terms of share price over the next year. I don't know if it'll do that. I can't tell you. I'm not a good 1 year prediction dude. I'm more of a long-term, hey, this company has good leadership. Long-term, it'll do fine, right? But they think it's going to do well even over the next year. Morningstar disagrees. A narrow economic moat, and then 1 star there. You get 3, you get buy, neutral, moderate ESG score. Take a look at what some analysts have to say. A little bit more in depth. So there's some people that say sell. Usually you don't get that with analysts. However, I'm assuming it's because of rates and all that, and that muddies the water a bit. However, 9 of the 22 analysts do say buy. Only 1 or 2 say sell or underperform. It looks like there's 2, maybe 3. Looks like 1 dude saying underperform, 1 saying sell, and the rest saying hold. If I'm honest, I don't really care what analysts have to say. It factors into the broader picture, but generally they don't do anything controversial. I mean, the amount of stocks I've covered on this channel, I do look at it for every single one, and almost always they're in line with each other. It's either hold, buy, or strong buy. So I don't really hold them with too high regard, honestly. But anyways, that's really all I got for you guys today. This is a solid stock. It's a solid company. It's a good dividend. I like the utility space. I really do as a long term. And certainly, even as diversification, I'm assuming if you're watching a video about this, you are somewhat in the dividend-utility space already. I like some other ones. I really like Duke's. I'm assuming most of you know of that. There's a few others that I like as well. I'm not going to really say off the top of my head, although there's quite a few. I like REITs in this area too. But anyways, that's all I got. I'm getting into the weeds here. But if you enjoyed this video, I'd appreciate if you left a like, subscribe. If you like the content on this channel, I do daily stock videos on the channel. But anyways, that's all I got. See you.